This is the Traders Exclusive Live Trader Showcase. This is a quarterly event where we feature expert traders, our year-end edition of the Live Trader Showcase. So please check out tradersexclusive.com, where we regularly post our video clips with valuable trading tips and techniques. That's also where you're going to find the recordings of today's webinar. And of course, I'll send you an email so you can find them. Before we get started, you know the drill. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. And that is our cue to get started. This is our lineup. We want to thank our sponsors for December. We have blue chip sponsors, Market Taker Mentoring, Hit and Run Candlesticks, and Vantage Points. And our IPO sponsor is Moomin. Our next speaker is Jeff Tompkins of Altos Trading. He's going to be talking to us about one formula for finding stocks that are ready to explode higher. He's a professional stock, options, and futures trader. He has a BS in finance from Santa Clara University and over 24 years of experience trading in the markets. He has had a successful career, which led him to create Altos Trading in order to help others achieve financial freedom through consistent and profitable trading strategies. Jeff has been successfully trading since 1999 and over the years has developed an arsenal of highly tested trading strategies which have remained effective regardless of market conditions. The main objective of the organization is to teach these disciplined strategies to those who are striving to achieve consistency and success in the markets, which I don't even know if there's anyone who doesn't want that. And if so, kind of like Bubba said, they need to be at the casino. Altos trading philosophy is to give students the best learning experience without any fluff, complicated techniques, or unnecessary software. And their members receive a direct path to success with clear instructions that drastically reduce the learning curve to profitability. Jeff, thanks so much for being with us.
Well, great to be here, Sherry. Thank you so much. Well, I'll go ahead and kick it off. Thanks again for having me, Sherry. It's a pleasure to be here, and welcome to all of you. Great to have you guys here. Today, we're going to be discussing one formula for finding stocks ready to explode higher. This is a new twist on relative strength. So I'm going to go ahead and get started. I've actually got a little video to kick it off for you guys. All right, well, as you can see, the margin between victory and defeat can be quite small. And that is certainly true when it comes to trading. Often it's just a minor difference that can differentiate the success from the failures. That's what we're going to talk about today in finding stocks that are ready to explode. I'm going to share my formula with you guys today, give you a little bit of background on myself prior to that. I do have almost 24 years of experience trading the stock, options, and futures markets. I received my professional training at Morgan Stanley at the trade desk, and founded Altos Trading about 8 years ago. We currently have over 60,000 members in over 100 countries across the globe. I'm also a hedge fund manager, so I do manage capital for my clients at Altos Capital. And a lot of what I share on educational events such as this are strategies, tactics, methodologies that I deploy in my hedge fund. I'm also the founder and manager of some of the top performing options and stock alert services out there on the market today. I'm going to be sharing one of my core strategies that we use here at Altos, and I use myself in my personal account. So before I do that, I'll read you a quick disclaimer. Trading securities and options involves risk. Prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options, and of course need a broker to trade securities and options and must meet suitability requirements. We'll be going over some various results together today, and just know that any results I share on our session today are not necessarily indicative of future performance, although they may be based on actual trades and may include hypothetical results. Due to the time-critical nature of trading, brokerage fee activity of other subscribers, we don't guarantee that anyone will mirror the performance shared in this educational presentation. All right, so by the end of our session today, you're going to discover how to gain the extra 1 degree trading edge that can put you ahead of some of the best traders and investors in the world. And whether you're just starting out or you're a seasoned pro, this is must-have information for today's markets. As markets become more volatile, less predictable, it's critical that we have tools in our toolbox to find opportunities like I'm going to share with you guys today. And that's where the 212 degree difference comes in. All right, so as we saw at 211 degrees, water's hot, but it's still standing still. It's not doing much, kind of like a lot of stocks before they take off. And if you've ever wondered, why does a stock go through periods of not really doing much? Often it will trade in a sideways range or not really make any significant directional movements. And then all of a sudden it takes off, right? And so as the temperature rises 1 degree and water starts to boil, it can create steam that can power a locomotive train. It's that 1 degree difference that makes all the difference in the world. And that 1 degree difference is kind of like when a stock starts to outperform a major benchmark index or sector and then skyrockets. Now, there's a number of ways to gauge this. And the traditional way is what's called the relative strength index, or the RSI indicator. Some of you may have heard of this indicator or maybe even used it. If you haven't, I'll give you a little bit of background on it. It's a momentum indicator, so it's used in technical analysis. And what it does is it measures the magnitude of recent price changes to evaluate whether a security is overbought or oversold. And it's displayed as an oscillator. We call it a bounded oscillator. So it has 2 extremes, the minimum being 0 and the maximum being 100. The indicator was developed back in the 70s by J. Wells Wilder. In fact, he talks a lot about it in his 1978 book, New Concepts in Technical Trading Systems, which is a great read if you haven't picked that one up. And he kind of goes through what the RSI indicator is and why he thinks it's useful. Now, when we talk about the interpretation of the RSI, right, the traditional interpretation and how it's really predominantly used today is that a value of 70 or above indicates a security is becoming overbought or overvalued and may be primed for a trend reversal or corrective pullback. An RSI reading of 30 or below indicates an oversold or undervalued condition. All right, now there's a couple problems with this. So I want to highlight these problems and then talk about how we can address them. Problem number 1 is that stocks can remain overbought or oversold for extended periods of time. It's that old John Maynard Keynes saying that the markets can remain irrational longer than you can remain solvent. And there's nothing further from the truth. So when we look at, closer to the truth, when we look at whether a stock is overbought or oversold, it can remain that way. And we're going to look at some charts to demonstrate that for very extended periods of time. So if a stock, if you're interested in trading a stock, let's say you're going to buy shares of a stock, and the RSI is telling us that it's oversold, so that it makes sense to come in and buy shares. That oversold reading can remain in place for extended periods of time, and in particular while the stock is either not recovering or continuing to rotate lower. Okay, so that's a real problem. And this is what it looks like. So this is a daily chart of Tesla, TSLA. All right, this is from a previous year. And you'll notice that in the month of October, the stock starts to break out of its trading range and move higher. You'll also notice that the RSI is giving us an overbought reading. In other words, it's printing a reading above 70 for several weeks during this period, right? It dips back below, and then in December and January, rises back above the 70 overbought level. But what I want you to notice is while it's giving us overbought readings, what is happening to shares of Tesla? They're actually going up significantly. So if you own shares of Tesla at the time, or were maybe even considering a bearish strategy, shorting the stock, or using put options, for instance, because RSI told us that it's overbought, that wouldn't have worked out so well, right? Here's another example. This is Best Buy. So daily chart of Best Buy. And again, you'll notice that the RSI is bumping up against the 70 overbought level, okay? In July and August of this particular year, it's well above the overbought 70 level. But look what's happening to the shares, right? Obviously, they're not overbought because there's still inflows into the stock and the shares are continuing to appreciate, right? So it gave us misleading information. Here's one more example. This is Amazon. And you'll notice that in this prior year, June, we're getting overbought readings on the RSI into July. But what's happening to the stock? It's going up, right? And in fact, it went up without ever giving us any oversold readings. So this is a real problem with the traditional RSI indicator. What we're going to do today is address this problem, and I'm going to also talk about one additional problem using a twist on the traditional relative strength. All right, so let's take a look at this chart of Amazon. All right, and you'll notice that the stock, it's on the very far left edge of the chart, isn't really doing a whole lot. It was kind of range bound until around early May. It became a relative strength top performer. So it was outperforming a benchmark, which I'm going to explain as I give you the formula here momentarily. All right, but notice that during this period where it was a strong relative performer, the stock was going up. Okay, and this is where the old RSI indicator would be giving us overbought readings. All right, and then you'll notice that early in November of this year, this particular year, that the stock became an underperformer. And notice what happens to the shares. They end their uptrend and they start ranging in a sideways channel, okay? So this might not have been the best period to go long the shares, right? To buy shares of Amazon. All right, so this is a different way to approach relative strength. Now that leads us to problem number 2, okay? Problem number 2 with the old RSI indicator is that it only measures the current strength of a stock relative to its past price, all right? So I want you to think about that for a second. And this is what most indicators do. They compare current price data to past price data of the same asset. All right, so it's basically comparing itself to itself. So if you think about that a little bit deeper, what does that mean? Well, if a stock is going up in price, naturally the RSI is going to slope up, and if the stock appreciates high enough and long enough, we're going to get an overbought reading on the RSI indicator, right? Because it's just comparing its current price to its past price. Well, that's a real problem. That really doesn't actually give us much valuable information. So what's the solution of these two problems? Wouldn't it make a lot more sense to identify a top performing index or sector and select a stock that is outperforming it? So rather than compare the current stock price to its past stock price, in other words, compare itself to itself, wouldn't it make more sense to compare it to an actual benchmark index, a sector, industry? And that's the extra 1 degree difference that can take a losing system and give it the steam to spot the next stock that's ready to explode. This is the 1 degree difference, because often when a stock begins to outperform a major index, industry, or sector, it goes on to make a big move up. The key is to identify stocks that shift from underperforming to outperforming relative to a benchmark index or sector. And once we identify these, the opportunities can be the golden ticket to beating the market. And I'm going to walk you through my 4-step system of how to do that. But this works in all market conditions. In fact, we used this extensively last year during the bear market of 2022, and it spotted some incredible opportunities. So it's like Jim Cramer from Mad Money says, there's always a bull market somewhere. So even if we're in a market correction, a bear market, relative strength, when used correctly, can help us identify opportunities that outperform the broader markets. And even in the worst market conditions, there are stocks that are going up, and relative strength can help us spot these opportunities. All right, so let's take a look at another chart. This is going back to Tesla, okay? Now I've got both the new twist on the old RSI indicator, which I've also got plotted on the chart here, side by side, okay? So notice what's happening here in right around the third week of September. Again, this is from a prior year. You'll see that prior to this period in September, Tesla wasn't doing a whole lot. It was just really trading sideways, kind of oscillating between $40 and $50 a share until it broke out of that trading range in September and October. And what I want you to notice is as the shares of Tesla began to explode higher, the old RSI indicator was giving us overbought readings. Okay, so it was basically telling us that if we had bought shares of Tesla, the stock's overbought, it might be a good time to get out. That actually probably wouldn't have been a good idea, because if we bought when the new twist on the relative strength indicator told us that it was outperforming, it continued to do so for many months and actually went up over 1,800% in this period of time. All right, and all the while, the old RSI indicator is telling us it's overbought. So let's get rid of the old RSI indicator, and we're going to look at a new approach. Okay, so this is Teradata TDC, again from a prior year, and you'll notice on the left half of the chart, so October, November, December, the stock isn't really doing a whole lot. It's just, again, in a sideways channel until around the third week of January rolls around, right? And notice how on this very specific day, the new approach to relative strength told us that this stock went from being an underperformer to an overperformer, right? And very shortly after, just a matter of days, it went up 125%. All right, here's another example. This is actually one I traded in my hedge fund, Futu Holdings, FUTU. We're out of the position. This is from a prior year. But notice how on the very left of the chart, the stock is trading around 40 bucks a share, okay? And around that time, the new and improved approach and formula to relative strength told me that Futu was beginning to outperform its benchmark index. And again, I'm going to explain what that is here momentarily. What I want you to notice now is that shortly after, the stock went up 380%. It's a huge triple-digit percentage move in just a matter of a couple months. So now I'm going to give you my 4-step system for identifying these opportunities. All right, so there's 4 simple steps. I'm going to walk you through each one of them. Step 1 is to identify a top-performing industry and sector. And again, I'm just going to give you the steps here, and then we'll dig down into each step so you know exactly how to do this. Step 2 is then to screen for stocks within that industry or sector. Step 3 is to then compare the relative strength of each stock to an index or ETF that tracks that industry or sector. And finally, step 4 is to select a stock that changes from underperforming to overperforming. All right, so let's walk through each of these. Step 1, okay, first we need to know what the formula is. So we're comparing one asset to another. All right, so we're gonna have 2 data points. And this may look a little complex, but it's relatively simple, and I'll explain it to you. All right, so data point 1 is our stock price. And by the way, this can be applied to any asset class. You can use it with stocks, ETFs, futures, Forex, whatever. But I'm just using stock as an example. But that's our data point 1, okay? So that's whatever asset we are considering trading. Then we have data point 2, that's our reference price. So that's gonna be the benchmark asset that we are comparing the asset we're looking at trading to, okay? Now, as far as the logic goes, as long as our data point 1 or our stock price is greater than 0 and the reference price, the asset we're comparing it to, is greater than 0, then we're gonna get a log value. And that's basically the log, which is the stock price. So that's data point 1 divided by data point 2. Now, to get the relative strength of that asset, what we do is we take the average of that log value. So again, that's data point 1 divided by data point 2 times the length. So we're going to use an RS length of 90 days. All right, so this is a 90 period RS, look back period. All right, for the RS length. And then we're going to use an EMA length of 3 periods, okay? And then we're going to multiply that by 100. So once we subtract the log value length and the EMA length from the log value, we multiply it by 100, it's gonna spit out a number. And that number, if it is positive, is gonna tell us that data point 1, the asset we're looking at trading, is outperforming data point 2. Okay, so it's really that simple. If we get a positive number, now if it's a negative number, then that tells us that the data point 1, the asset we're looking at trading, is underperforming the benchmark reference. Okay, so this is the formula that we apply. Now, how do we find the top performing sectors? This is data point 2. So what are we going to benchmark it to? All right, so I'm going to give you a nice little tool that you can use to discover this. This is a site you may have heard of called finviz.com. We have no affiliation to Finviz, and I believe they have monthly subscriptions and whatnot, but those are not necessary for the purposes of what I'm showing you. You can do this all for free right off their website. And what you'll do when you go to finviz.com is you'll go to the top menu bar and select the Groups tab. All right, and when you click on the Groups tab, it's going to take you to a relative performance page. Now, this is not a current data set of relative performance. This is from the past, so don't think that industrials, utilities, and energy are our top performers at the moment. This is, again, from a previous year, but just to demonstrate what we're looking for, okay, we want to look at the 1 week relative performance, the 1 month relative performance, the 3 month relative performance, and the 6 month relative performance. So we're going to look at these 4 different time intervals. All right, and once we've got those, once we're honed in on those 4 different time intervals, we're going to look for something very specific. We want to find an industry or sector, and I believe Finviz allows you to select between either industry or sector. We want to find an industry or sector that is, number 1, performing positively, and this is benchmarked to the S&P. So this means that industrials on a 1 week relative performance is outperforming the S&P by just under 4%. All right, and we want to look for an industry or sector that resides within the top 3. Okay, so you'll notice on the 1 month relative performance, industrials come in at number 2. So they're outperforming the S&P by just under 4.5%. Then when we look at the 3 month relative performance, we see industrials once again in the top 3 spot, outperforming by just under 12%. And finally, on the 6 month time interval, we see it come in at number 3 again. Industrials is outperforming the S&P by just under 30%. All right, so we now know that industrials across 4 different time intervals is a top performer, and it's already beating the S&P 500. All right, so just so you know, and as a money manager myself, I see this stat thrown around all the time, and it's certainly true that fewer than 1% of professional money managers are actually able to beat the S&P 500 index on a consistent basis. All right, so we've now just uncovered in a sector that is already outperforming and beating the S&P 500. Okay, so we're going to use industrials as our benchmark. And a good way to do that is to simply find an ETF that tracks that industry or sector. Like if you, for instance, identify energy as a top performing industry, then you can use the XLE ETF as your benchmark. All right, so when we compare a stock, so again, going back to the 4-step process, we're then going to scan equities within the industrial sector. So here's what I found, BLDR. Again, this is from a previous year. All right, and in June and July, it was underperforming the industrial sector, right? So it was not doing real hot. It wasn't doing terribly, but you can see on the very left edge of the chart there, it was kind of in this little downtrend until around the 3rd week of July, on a very specific day, it begins to outperform its benchmark. All right, and notice how it continued on a daily basis to outperform its benchmark over the coming months. And the stock went up 113% in this period of time. Here's another example. This is Deere, ticker DE. Once again, notice, this is from a prior year. Notice in early July, the stock is underperforming its benchmark. All right, so it's trading right around 160 a share. Then around mid-July, it begins to outperform its benchmark. Okay, and notice what the shares of the stock do. Okay, and think back to the traditional RSI. What it's probably doing, it's probably giving us overbought readings. Okay, but in this case, Deere went up 122% over the next several months. All right. So I'm going to continue to walk you through the steps here that are part of this 4-step system to help us identify these. So once we've spotted these opportunities, we've identified a top performing industry or sector, we've scanned for assets or equities within that industry or sector, all right, and we've identified opportunities, and let's say we trade one of these opportunities. Now we need to manage it, all right? So there's a couple ways to do that. We can continue to hold the shares until the formula tells us that it's no longer outperforming, it becomes an underperformer. That takes quite a bit more legwork. So what I prefer to do is use a 2-target system, all right? So to lock in profits on successful opportunities, I set a profit target number 1 at 5 to 10% on the first half of the position. So let's just say hypothetically we traded 500 shares on one of these opportunities, okay? When it hits a minimum of 5%, maximum of 10, and I typically will use 5% as a starting point because I'll show you as we get into profit target number 2 why that can be beneficial. So let's say we set a 5% profit target. We hit it rather quickly, and we go ahead and exit half of the shares. So that would be 250 over 500 shares. And then we leave the remaining 250 open. Okay, so this is called scaling out. All right, and that's where profit target 2 comes in. For profit target 2, we set a 10% trailing stop on the second half of the position to help capture the big gain. So as we looked at on some of these chart examples, when an asset begins to outperform its benchmark, it can often go on to make very significant big moves, double digits, even sometimes triple and quadruple digit moves. So to try to capture as much of those moves as we can, for profit target 2, we use a 10% trailing stop. All right, so this is the scaling out approach that we use with the relative strength system. Now, another beautiful thing about this new approach to relative strength is it's great for timing directional option strategies. So if you guys are options traders, I do the bulk of my trading in the options market. Option strategies, directional option strategies, often require very precise timing. You've got to get a lot of things right. Your delta, gamma, theta, vega, you've got to get it all dialed in at the right time to have a successful directional trade, like buying a call or selling a put or vertical call spreads, bull put credit spreads, calendar spreads, the list goes on. But the beauty of the relative strength formula that I'm sharing with you is it can identify on the very specific day that the asset begins to outperform its benchmark. So it gives us a very precise timing component. So let's walk through an example of how a simple 5% move up in a stock can equal 100% gain in the underlying option. All right, so this is an example of a relative strength using options on Apollo. Okay, so this is APO, again from a prior year. And you'll notice that on the left edge of the chart in April, the stock wasn't doing a whole lot. It was just basically ranging sideways around the 28 level, okay? Until the middle of April rolls around. And I believe it was April 16th, on that very exact day, Apollo began to outperform its benchmark, in this case, the S&P 500 index. So at the time, in this prior year, the S&P 500 was performing very strongly. So it was the market leader, across all the major indices. So we're using the S&P 500 index as our benchmark. All right, so we've now identified, applying the formula, using the FinViz scanner, that Apollo is beginning to outperform its benchmark, the S&P 500 index. All right, so how would that look if we traded options around this? All right, well, on April 16th, we saw that the relative strength formula told us Apollo was beginning to outperform the S&P 500, which was already in a strong uptrend. And on that particular day, the stock closed at $29.66 a share. All right, so what we can do is we can buy at the money, in this case, the September 30 strike calls. And I like to go out, 2 to 3 months in expiration on these types of opportunities to give the stock plenty of time to make its move. And in this case, those could be traded for $1.70 per contract. All right, so we'll just use 10 contracts in our example. Let's say we bought 10 of the September 20th expiration 30 strike calls. All right, and we would do that on the day that the stock began to outperform its benchmark. So that's April 16th. All right. So $1.70 a contract. If we traded 10 contracts, that would be a $1,700 investment, less any broker commissions and fees. All right. Only 6 days later, as we saw on the chart, the stock was already trading up 5%. And that resulted in nearly 100% move in the option. So if we fast forward to April 22nd, we see that our open P&L is positive $1,650. That's almost what we paid for the contracts, right? Now, we can also apply the scaling out technique that I just shared to the options market, right? So let's say we traded 10 contracts, we hit our initial 5% profit target. We've experienced nearly a double in premium on the contracts, and we have a choice now to make. We can close the position out for a nice win, or we can keep 5 of the contracts open and close the other half. All right. So what happens if we do that? Well, as we saw in the chart, Apollo continued to outperform, so it never dipped back into a negative number or an underperformance situation. And if we had held on to the remaining 5 shares, you'll notice that we would have picked up an additional $4,225 as Apollo continued to outperform its benchmark. All right, so by scaling out, we took a potential $1,650 win and turned it into a potential $5,050 winner on a small $1,700 investment. That's a 297% ROI in just a very short period of time. All right, so this is what it looks like when we apply options to the relative strength strategy. So I always like to tell our members at Altos, time is not money. So it's the most valuable resource on the planet by far, right? And we can't earn it. We can't create more of it. We can't get it back, right? Whereas money, we can, right? We can always earn more money. We can always create more, and we can get money back if we've lost it, right? By working more. So it replenishes. It's a replenishable asset, but time isn't. And this is what kind of the mantra we impart on our members at Altos, and what I try to live by, because I used to trade my time for money. I used to work a full-time day job, but now I trade so I can have time. And that's really why I do trade, because it gives me the time to do the things I love. This is me right behind our house in Boise, fly fishing on the river. I'm an avid fly fisherman. I love to backcountry ski, take trips to Europe. This is my wife and I took a trip to Venice, and love to go sailing out in the bay. This is my old stomping grounds. Grew up in the Bay Area, and love to go out, take the sailboat out on the bay. But these are the reasons that I love to trade. And when done correctly, it allows me to do this. And again, this is what we strive for our members at Altos. So now you know that when a stock gains that extra 1 degree and begins to outperform a top performing index or sector, it starts to boil and often results in explosive moves to the upside. And I've revealed my 4-step process for identifying these opportunities. It does take a lot of time and work to sift through over 5,000 stocks every week to find the very best. So what I want to offer to you guys for being here today is for us to do the heavy lifting for you. So myself and my team run through this 4-step process every single week. We do all the scans, all the screening, apply the formula, and look for the top opportunities for that week. And we send them to our members' inbox or smartphone by text, SMS if you guys prefer. All right, and we send these out every week. So you can even take any other indicator or system that you're currently using, and you can apply it to our top performing relative strength stocks. We have a lot of members who use other tools and like to get our picks so they have a good starting point, right? That all the legwork has been done for them to find trading opportunities. All right. So what we've done is we put together a very special relative strength pick service, especially for you guys. And that includes access to our best trades right to your inbox. So we send these again via email or SMS text, whichever you prefer. You don't have to sit and watch your computer all day. We actually send these out after market hours. All right. So you're ready to go for the very next trading day after you get our weekly alert. You get the easy to read instructions. It includes the profit target levels. On average, we send out about 15 to 20 alerts per month. It's based on market conditions. So there might be some weeks where we send, 3 to 5 alerts. There might be some weeks where it's 5 to 10. But I would say on average, expect about 15 to 20 alerts per month. All right, so there's a plethora of opportunities that we find, that we uncover, and that we send out to our members. And that includes what you receive as a ticker symbol. So you get the exact ticker symbol for the asset that we've uncovered that is outperforming on that very day. The company's name, the stock price, the profit target 1 level, the profit target 2 level, and our analysis of why the stock is expected to outperform. So we give you everything that you need to make an informed decision. All right, here's some examples of some recent ones we sent out to our members. This is eBay. This one was sent out earlier this year, January 5th. We identified that eBay was outperforming its benchmark, and at that on that day opened up at 43.01. So that's where our members were able to enter the shares. Just under a month later, February 2nd, it's trading up at 52.23. That's a 21% absolute return and an annualized gain of 274%. Here's another one we sent out the same week, American Airlines, AAL, January 5th. Our members were able to enter this one at $13.50 a share. Just under 2 weeks later, January 18th, it was trading up at $17.64 a share. That's a 31% gain, annualized out to 870%. Here's one the following week, Peloton Interactive. This one was sent out January 12th. The shares then could be entered at 10.89. All right, just a couple weeks later, it was trading up at 17.83. That's a 64% gain, annualized out to over 1,000%. Here's one that went out the next week, Truist Financial, January 20th. Those shares could be entered at 47.82. Just 4 days later, they could be executed at 53.34. That's 11.5% gain. In only 4 days, annualized out to over 1,000% again. Here's one that went out the next week, Veritone, January 26th. The shares could be entered then at 7.56. This one could be closed just about a week and a half later, February 6th at 10.99. That's a 45% absolute gain in just a very short period of time, annualized out to over 1,300%. So these are the types of opportunities that we've uncovered recently. I'm going to share some more with you that we uncovered even last year during the bear market. XPEV, we sent an alert out to our members. It was outperforming. It went up 8% in 1 day. Vail, again, sent the alert out to our members, and it blew up 11% in 4 days. DocuSign went up 12% in 1 day. US Steel, 16% in 1 day. TECL went up 25% in 12 days. SGH went up 31% in 5 days. MCHP went up 15% in 14 days. ESI went up 9% in 14 days. SGFY went up 13% in 7 days. In fact, about 75 to 80% of our picks hit their initial 5% profit target. And many of these go on to make very significant percentage moves after they've reached profit target level 1. All right, so I'm going to share with you guys everything that we've built into this relative strength package, and then let you know how you guys can get your hands on it. All right, so you're going to get an entire year of our relative strength picks. Again, that's on average about 15 to 20 a month, depending on market conditions. All right, so you're going to get hundreds of picks per year. That's a $1,499 value. You get the priority text alerts to your phone if you prefer to receive those on your mobile and don't want to worry about missing an email. We can text these to you as well. That's a $299 value. You get exclusive access to our invitation-only Facebook group, retailed at $199. This is a private group. It includes over 800 of our very best members who trade our systems like the relative strength. You can interact with them, share ideas, etc. We're also going to throw in some extra training, which I'm really excited to share with you. This is an online course, if you guys trade options, that goes into various option strategies and different ways to make adjustments to strategy to open trades. All right, so we're going to throw that training in. It's retailed at $900. We deliver everything again after market hours, so you don't have to day trade. You don't have to worry about being at your computer while the market's open. You get 15 to 20 picks per month on average. Okay, just so you know, we've been exceeding that most months. So I'd say that's a kind of a minimum benchmark there. And ultimately, you get to learn to trade stocks and options with consistency, and that's what we're here to help you do. Now, I'm going to throw in 2 really cool bonuses. So bonus number 1 is for our professional trading series online course. This retails for $595. It's 10 hours and I believe like 9 or 10 modules of our very best strategies. So we got to spend about 45 minutes to an hour together today. And imagine that multiplied by 10. So this is what we built into our professional trading series online course. I revealed our relative strength system to you guys today. We, in our professional trading series, reveal many more of our best strategies, systems, indicators that we use to trade the market successfully. It's all online. You can watch it at your leisure. And bonus number 2 is my latest ebook, How to Create Risk-Free Trades. This is a great supplement to the relative strength system. It walks through various money management methodologies, strategies, and tactics to mitigate risk in your trades, and even in some cases eliminate risk from the trade. All right, so that's a great bonus that retails at $97, and we're going to throw into the package as well. So we built this package especially for today's event that's retailed for over $3,500, and we are discounting it incredibly heavily, in fact 92%. So you get everything in the package for only $297. It breaks down to less than 25 bucks a month, and you can take advantage by going to www.altostrading.com/RS23. And Sherry will be putting that in the chat for you guys as well to make it easy for you. All right, so altostrading.com/RS23. You can claim the 92% off. Again, we only do this on special events like today, so this is not something you can get right from our website. So if you want to take advantage of this incredible discount, everything in the package, this is how you do it, okay? We do limit this to 20 seats for purposes of onboarding and working with our new members. We strive to give you guys the best customer service we possibly can. And for that reason, we don't just allow unlimited numbers of people to come into our services. So once the 20 seats are gone, you can still get anything you see here on your screen, but it will be at the retail price. So if you want the 92% discount, there's the link for you. Now, I'm going to open it up to questions here in just a minute. But first, you might be wondering, well, who's it for? Well, it's designed for everyone from beginners to seasoned traders, all right? So if you work a full-time job, part-time job, or maybe you're retired and out doing other things that you enjoy, again, we send everything out that you need after market hours, and you get it all up front. You know your exact profit target levels, you know where to enter the shares, you know the very day that that asset is outperforming its benchmark. You get it all after hours. And we have students in over 100 countries across the globe. So regardless of where you live, markets are global now, right? Everything is intertwined, and you can really trade these opportunities from anywhere in the world with any size account. You decide how many shares you want to trade. You decide which picks you want to trade. Obviously, you're under no obligation to trade every single one of them. So it really is up to you. And it's also for people who want to learn how to trade, because we teach, as I've done today for you guys on our session, not just the strategy, what the strategy is, but the inner workings of it and why it works. And then we demonstrate the effectiveness of the strategy through our trade alerts, right? It's proof that what we teach works and is real. So whether you want to learn the inner workings, and that's why, again, we threw in the professional trading series online course as an extra special bonus, or whether you want to just be spoon-fed the alerts, and we have members that do both. And so some people learn the strategy and maybe go out and do some of their own picks, but they also want to receive the picks that myself and my team are working hard to do every single week. All right, so there again is the link, altostrading.com/RS23. We've already got people joining, so the seats are going fast. For those of you who are already joined, welcome. Just to give you a quick description of what happens, you're going to automatically be added to our members list and directed to the Trade Alert membership registration page. And then once you register, you're going to receive a confirmation email in a few hours confirming your access. You're going to get exclusive access to the members only portal. That's where you're going to get to see all of our picks, and then also be registered to receive this week's picks, which will likely be coming out either today or tomorrow. All right, so you're going to receive your very first alert this week. And then you get the 2 special bonuses. Right, so you get bonus number 1, our professional trading series online course. That's over 9.5 hours of training and 9 modules. It's our best options, equity, and Forex strategies. You can watch it anytime. It doesn't expire, and it includes all updates in addition to the course. The training comes with our coaching trade tracker spreadsheet, so you can use that to help keep track of all your trades. And it includes trade selection, trade adjustments, chart reading, trade management, and a whole lot more. So it's a really cool online course that I've created and developed over the years and updated and added to. And so you'll get access to this as well in the members area, retailed at $595. I think this alone makes the package more than worth its weight in gold. And then you get bonus number 2 as well, my latest ebook, How to Create Risk-Free Trades. I'm going to throw in a guarantee as well for you guys, and then I'm going to open it up to questions here momentarily. So if you're not convinced this is the best strategy for you, we do offer a full 30-day money-back guarantee. All right, so you get access to everything right off the bat when you join. You get to review everything, start receiving my weekly picks. If you decide for any reason it's not for you, just let us know. No questions asked. We offer a full 30-day money-back guarantee. All right, so I'm going to go ahead and open it up to questions. We've got a little bit of time left, so we should have plenty of time to answer questions. If for any reason I miss one or don't get to one, this is our contact information. You can always email us at support@altostrading.com or give us a call at 800-895-9348. If you prefer to place your order over the phone, you're more than welcome to. If all of our representatives are tied up, our phone system does have the ability to leave a voicemail, so please do so if you're not able to get to reach one of our representatives. We're probably getting inundated with calls at the moment, so please leave a message and they will call you back within the day today. The quickest way to join again is altostrading.com/RS23. And here again
I did
is
put that in
everything.
the chat.
Great, yeah, Sherry just put it in the chat. Thank you, Sherry. Got our offer link, our support email, and our phone number. And by the way, guys, if you have any trouble with the link, and Sherry, maybe you could help me out with this. Depending on your browser, if you don't put the www in, sometimes you get a 404 error.
Yeah, I did. It turned out 404.
Did it? Yeah, it does that with some browsers for some reason. So you want to we'll re-enter the link for you, but make sure you type in that www.
www.altos. That's a setting in your hosting.
Yeah, we have it set to not do that, but there's something with certain browsers that
It's probably caching.
Yeah, exactly.
Taking place. Yeah.
Yep.
So you do have some questions.
Okay,
and
great.
You know what? I know for a fact, and you can decide if you want to do it now or not, but Jeff has contributed a pretty fantastic prize giveaways. One
Yes.
giveaway today. Do you want to do one?
Yeah.
Before you get out of here?
Do you want to go ahead and do that, and then I'll start taking questions?
Sure. So how about if you write down a number, don't tell us what it is. And
Okay,
200.
What was the bound? You kind of cut out there, between 1 and 200?
Yeah.
Okay, I got one.
All right. Now, I would like everybody who is listening and actively listening. Juan, was that your 252? You got to go a little lower, Juan. Between 1 and, did I say 200, didn't I?
Yeah, 1 and 200.
So if everybody will put in a number, you guys will be in a draw. Let me tell you what it is. You don't even know what it is, and you are putting your numbers in. This is cool. Very, very cool. Professional Trading Series online course. Isn't that one of the bonuses that you just
That is one of the bonuses. Yes, it is.
And it's worth $595. And it seriously sells this product for $595. So put your numbers in. All right. Come on. Everybody listening? No worries. Only put it in once, you guys. Abdul, that's a little too high. All right, I'm going to close it down now. 5, 4, 3, 2. Who's the closest one? What number did you pick, Jeff?
My lucky number was 77.
77. Our last number that came in was 17. Let's see. Anything below. All right, I think 77 is the closest, neither up nor down.
Somebody got it right on the nose?
Wait, no, I say 87. Dave has chosen 87. So Dave, what I need you to do is send tradersexclusive.com an email telling me that you won Jeff Tompkins prize. And then what I'm going to do is send your information to Jeff, introduce you guys, and then they'll take care of it from there. Does that sound fair?
Congratulations, David. It was David, right? That won?
Dave.
Dave,
Dave.
all right.
And
Congratulations.
then, oh, stop. Okay, so we have 5 minutes for questions.
Okay, great. Looks like I see your questions that you've relayed over here in the
Yes.
chat. Loved your presentation. Thank you so much. What time frame do you use for options trading, and how do you choose the time to expiration and strike? Very good question. So I think I forgot to mention that the vast majority of our weekly picks are optionable securities. It's pretty rare we send one out that doesn't have options that trade on that particular stock or ETF. We don't provide options alerts. So if you want to trade options around with this service, I should say, if you want to trade options around the relative strength picks, that's would be up to you in terms of what strategy and strike and expiration you choose. For just as a guideline for like a directional single call purchase or even a call debit spread, typically I think an at the money strike is appropriate. And as I mentioned during our presentation, generally, 2 to 3 months out to expiration is a good time horizon to give, that particular opportunity adequate time to run and make a significant directional move. So I would say an at the money strike usually tends to work pretty well. Obviously, again, that decision is up to you, and you want to make sure that you're selecting liquid strikes and expirations, et cetera, with adequate open interest and volume and whatnot. So good question. Another one, is there a way to isolate one stock out of a group that has potential to run further up if many are emerging relatively at the same time? Also a good question. Yes, so that's actually one of the things that I do each week is once I identify opportunities, sometimes there will be an abundance of opportunities, more than we would send out in alert. So what I do when I apply the formula is look at remember that formula that we looked at. I look at the ranking of the number of the performance number. So the higher the positive number, the more that asset is outperforming its benchmark. So that's typically how we will filter down opportunities. So theoretically, yes, you could apply the 4-step system, find your top performing benchmark index or industry or sector, run the scan of all of the equities within that industry or sector, apply the formula, and actually sort those, and there's going to be one that has the highest outperformance number, right? So yes, theoretically you could pick the very top one, and that's essentially what we do when we send our picks out each week. Let's see, do we have any trades done in November? Yes, we do. Actually, the trades we sent out last week did very well. I think we sent out 3 last week. I believe already 2 out of 3 have hit their initial 5% profit target. Yeah, we have done very well in November, done very well this year, and even last year in 2022 during the bear market actually had one of our best years. Let's see, once a stock becomes stronger than a benchmark, how probable is it that this stock returns to underperform almost immediately, so giving a loss? That's asked by Juan. So a good question, Juan. So it's obviously a possibility that a stock doesn't continue to outperform. I can tell you historically, again, we've offered our members at Altos this service for over a couple years now. I think we're coming up on 3 years actually. And it doesn't happen often. So I would say somewhere, again, I'm just kind of ballparking this, between 75 and 80% of our picks hit their initial 5% profit target level, typically, within days or weeks. But occasionally there will be one that begins to underperform, and so that's why it's important that you use good risk management. Use your stop losses, use appropriate capital allocation and position sizing. Those are all important aspects to any trading strategy, and that certainly includes the relative strength system in our picks. It's another good question. Let's see, Victor's asking, can it be paid monthly? for our package, we only offer an annual pricing on this. So because we've discounted it 92%, and it's only $297 for the entire year, we don't break that down monthly, since we've already heavily discounted it. Let's see, is it grandfathered? Yes, so it is grandfathered in, as long as you remain a member, and we have members that have been with us since the beginning when we launched this service, and have stayed with us because of the strong performance. And many of those might learn the system and kind of figure it out for themselves and be able to do it themselves. They just don't want to put the work in to do it, and that's perfectly fine. And they'll stay on with us for many, many years. But others, want to just kind of see how the process and how I'm doing it, and what picks I'm sending out. And maybe after a year, you're comfortable with how things are going and that you can do this fully on your own. And that's perfectly fine too. So whichever you decide, we're here to help you reach that goal. But if you do decide to continue past the year, you are grandfathered in at the 92% discount. So you'll never pay more than $297 a year for the package. Let's see. Hector's asking, how does the team put the trades for me? I'm assuming, Hector, you mean like how do we send them out? So they're going to be posted in our members area. And again, we also send those out by email and by SMS text message if you prefer. That's optional. But you can decide if you want to take that option and receive them by text message once you join and are in the members area. So it looks like we have just 2 seats left. So 18 of the 20 have been scooped up already. So we have 2 left, guys. If you want to claim one of the remaining 2 seats, again, www.altostrading.com/RS23. I'll go ahead and put our contact information up one more quick time since we are out of time. And you can reach out to us by phone or email as well. I want to thank you so much for being here. I hope you guys got a lot out of our time together today. And thanks, Sherry, for having me. It's always a pleasure.